What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on Sndl stock. First of all, brief information about this company. Sndl Growers engaged in the production and distribution of flower, pre-rolls and vapes. It operates through the following segments: cannabis, ornamental flowers and corporate. The cannabis segment includes legal cultivation and distribution of cannabis products under federally regulated licenses issued by Health Canada. And I just recently made my previous video and we have some news, but they are not related to their fundamentals. Just sneak peek on their fundamentals. So their total market cap for now is $1.88 billion. They have revenue of $55.65 million with net income of negative $240.76 million. Of course, they have negative EBITDA and they have a current ratio of 0.85. But as we know, they raised more than $89 million just in February, and they have more than enough money to cover all their debts. And let me show you some latest information. We are on Motley Fool and it is not the best source of news, but nevertheless, this article was published on March the 9th and it says Sndl Growers price target just jumped 20%, but there is a catch. Let me show you some positive and negative bullets. So, there is no secret that wheat will be a fast-growing industry over the next 5 to 10 years, and investors appear to be counting on Sndl to take advantage of this growth. Secondly, Sndl has cleaned up its balance sheet and raised a boatload of capital, following the exercising of 98.3 million warrants in February and its investment in Nvidia. My estimation is the company has in the neighborhood of $680 million in cash and equivalents in its coffers. That potentially makes Sndl the third or fourth most cash-rich cannabis stock in the entire industry. Third, Sndl looks to be focusing on its long-term margins. The company's management team is in the process of switching its operating model from wholesale to retail. It's a bit more work, but retail offers substantially juicier long-term margins and fewer oversupply concerns than wholesale. Finally, we can't overlook the 800-pound gorilla in the room, Reddit. And I think it was the most crucial point of this huge spike, and for now we bounce back, and I already mentioned about this in my previous video. So, and now let's switch to negative bullets, and let me quote it. Last week, Wall Street's consensus one-year price target for the company jumped by 20%. However, before you go mashing the buy button in your brokerage account, you should know that this increase is accompanied by a pretty big catch. Wall Street's 20% price target bump raised the consensus of Sndl from, drumroll, 30 cents per share to 36 cents per share, with the company closing at 1.135 this past week. Professional investors are still continuing on shares to decline by 68% over the coming 12 months. And here is the reasons why Wall Street is so negative. Sndl Growers management team improved its balance sheet by walking all over existing shareholders. The company has undertaken so many shares offering at the market offerings, warrant exercise and debt to equity swaps that its outstanding share count ballooned by more than 1.1 billion shares in just 5 months. And basically it's not a good sign, but they have money. To add Sndl brought approved 1 billion shelf offering this year. This would allow the company to potentially sell up to $1 billion worth of its stock over time. Translation: this share-based dilution isn't going to stop anytime soon. And here is the second bullet, that the company's transition to a retail model is coming fairly late in the hyper-growth portion of the cannabis industry's growth cycle. Aside from being behind most of its peers and having to build up its brand in a crowded retail market, Sndl has been forced to take sizable write-downs during its transition. While most of its peers are making to move to recurrent profitability, Sndl's losses will stand out like a sore thumb. And the third, company's fundamentals have widely detached from its current valuation, even taking into account that it's lost 75% from its recent intraday heights. According to Wall Street, Sndl Growers is on track for 71 million in sales in 2021 and close to $82 million in 2022. This works out to respective multiples of 25 and 22 times sales. By comparison, most US multi-state operators are turning the corner to profitability and priced at roughly 3 to 5 times next year's sales. And basically, I agree with these concerns, but all in all, you have to have all the information that is on the market, that is available right now, and you have to make your own decision. And here is some more information, and it is also on Motley Fool, and it says 2 penny stocks that could make you filthy rich, and it also was published on March the 9th. And it says that first positive reason is that pot stocks in general have been experiencing a renaissance in sort of since the US presidential election, on the hope that Democrats, who now control both Congress and the executive branch, will push through the major reforms on the legal status of cannabis. Second, Sndl, Brain Trust announced during its first quarter earnings release that it was exploring a broad range of strategic alternatives, including a potential sale of the company, a merger, or an investment in another Canadian pot company. Since then, Sndl has significantly bolstered its cash position, perhaps in a prelude to a sizable deal. So, at the end of the day, Sndl, like most of its cannabis peers, is in a tough position. The marijuana industry in Canada has been going through a host of growing pains since legalization, including but not limited to dramatic price compression, a slower than expected pace of legalization in key geographies like the United States, and fierce competition from both licensed producers and black market dealers. Sndl's task, therefore, is to navigate these turbulent waters by either finding a buyer or dramatically boosting its revenue by buying a peer. Either way, the company's stock could surge higher in response to the right deal. And the main risk is that Sndl stock is currently trading at an astronomical 30 times 2021 projected sales following this recent run-up. So, if a merger or a compelling acquisition isn't announced soon, this high-flying pot stock could fall on hard times. And let me show you some new data on institutional investors. As you can see, on March the 9th, Firetom Wealth Partners add $140,000 in value in this stock. And we can see the mixed feelings across this board, that some of them close their position or some of them open new position. And the closing of position is not so big, but nevertheless it is what it is. And according to Vanguard Group, we have 3 analysts that suggest to hold this asset, and 2 analysts that suggest to sell this position, and we are on Sndl growers, as you can see. And let me remind you that on March 17th and on March 18th we will have some results, financial results, and after that on March 18th it will be a conference call and a webcast, and there is a possibility then on March 18th they will disclose some information about potential acquisition and about potential path of this company. Before we dive deep into the technical analysis, please subscribe to my channel with notification bell and hit the like button. In this case, you won't miss my next video. From my previous video, as you can see, we poke through these these 2 supports, and bounce back, and I encourage you to add your position at this point. And from this point, we already up for around 30%, and it is a good gain for this company, for this asset. And according all of the information around the news feed, you can decide what should you do. So I suggest you to wait this data. It is earnings report, and it will take place on March 17th. But from this date, we will have a huge fluctuation in price. So from this point, we might go lower, or we might go higher. And if you believe in this company, there is nothing bad about it. I believe in this company as well, and I think another major catalyst for this market will be a legalization of marijuana in Mexico, and this will impact all the companies that are on market right now. and this will give a huge spike on price, but it will take place in April, and I will do another video about this information. So for now, if you believe in this company, that is totally okay. You are up for about 30% already, and if you have some concerns, that you have two possibilities. You can put a stop loss somewhere here when you have a guaranteed profit of 15 or maybe 20%, and if the price will go down, then you will have these profits. Or you can put your stop loss right at your entry price, and in this case this will be a breakpoint for you as an investor. Or you can add some buy orders below this level, and this will give you much more attractive price if you want to invest in this company for the long term. So you have all the information, you have all the possibilities, what should you do, and you have all the information what you should expect from this company. And with that being said, please subscribe to my channel and hit the notification bell if you haven't done this before, and hit the like button. So see you guys and girls next time. Bye.